Hello and welcome to Finextra. I'm Emily Horler and I'm here with Davide Girompini of IBM. Thanks for joining me.
Thanks.
Banks are under pressure to innovate to leverage new regulation and fend off new competition, but their costs are constantly under scrutiny. So what options do they have to achieve technology innovation in a cost-efficient way?
Well, innovation is definitely the only way banks can cope or actually leverage regulation and also fight against competition and make a role in the future banking and payment industry. I think the only way to reach efficiency is really to try to concentrate on core capabilities and find ways where banks can cooperate between each other to share costs. But the only way to do that is really to start rethinking the internal processes with a better separation between what is the customer experience part of their services and the processing side of their services. So a lot has been done, for SEPA and faster payment. I think the next wave will also require a little bit more cooperation and shared utilities between banks, just to lower down the cost for non-differentiating tasks and put budget closer to the customer need and to the customer interfaces.
There's a lot of hype about new technologies such as blockchain and distributed ledgers, but can banks really exploit these at an industrial level?
Okay, I think now we are starting seeing the first real attempt to bring this technology to the main street, let's say, to the industrial level. For a few years, the word blockchain was immediately linked to Bitcoin, and that was a little bit distracting the industry from the situation. But we see now every day in every news website a lot of initiative by big banks, by big institutions to invest in this technology, to understand where this technology can be applied. And even the concept that blockchain is strictly related to payment is probably false. There will be probably other areas where blockchain and open ledgers will be more useful than consumer payment, for example. How they can leverage, I think cooperation here is still very much the key point. And I think this is the way the banking industry is taking seriously this new technology, the new initiative with banks supporting startup, with vendors like IBM and others investing in providing solution based on blockchain, but that can be applied on a very high scale and reliable scale. I think it's going to be in a couple of years. We will see the result in a couple of years. I'm guessing that the next cycles will be talking a lot about blockchain.
Banks clearly have a lot of data to work with. Are they able to use it to the full, and if not, where are the gaps?
Yeah, this is another buzzword, data monetization and how can I make money out of my data and this kind of thing. There are gaps that are coming from regulatory impediment because the type of data that banks have are covered also by regulations. There are gaps coming from cultural approach. Younger generation are willing to give data to any kind of internet provider, but they are much more, skeptical about what the banks can do with their data. And there are also technical gaps. So the point is that in payments we still have a lot of banks that are siloed. So it's very difficult for them to put together a combined online data store. There are technical issues to use those data in a real-time manner, like the industry is requiring. I think even in this case, compared to the other discussion we were having about the cooperation, in this case, this is the real competitive field between banks. So banks will win on the market by leveraging the data they have, by augmenting the data they will have, by merging structured data and unstructured data in a way that they can use the data to provide new added value services to the customers.
Davide, thank you.
Thank you.
And thank you for watching.